Welcome to the Closing Beat, everybody. Happy Thursday. How you doing out there? Hope you're having a good day. This is a quick show that we do, the stock market update. We call it the Closing Beat, just a fun way to reference our name, Jazz Wealth Managers. Hope you'll check us out at our website, jazzwealth.com is basically the website. That'll take care of it there. If you're looking for a financial advisor or you're just interested in a short-term type trading, but you want someone to look after the long-term investments, hey, that's what we do. On our website, you can actually see our portfolios and everything, and lots of good things coming. Got a lot of good news today, actually, so we'll be sharing that with you. I'll do like I always do. I'm just going to go through everything that we have to offer today, and then I'll take your questions at the end if I can and if there's time. Also, our class tonight for customers, it's coming. There it is. You go into the dojo. All of our customers get access to our private library there. The class tonight is going to be right here. We're going to talk about the latest stimulus bill, all the proposals inside of it, and how it affects your dough. There's likely going to be a lot of changes to it, but we're going to go over all of that. And, of course, we'll take your questions as well and go over all the good stuff. You know, if you have questions about stocks, whatever you're doing out there, we'll talk about everything as well. I always stay as long as we need to answer all the questions. I'll do the same tonight, so join us at the Speakeasy if you're one of our customers. You want to play a game? It's called Guess the Dow. jazzwealth.com/Guess the Dow. You win $100, right? We don't market to you. Anybody that's played can attest. We don't send you one single email. We don't sell your emails. We don't care really about anything other than your guess. And if you're the closest without going over, we'll send you $100. If you're one of our customers, we'll give you $100 to your account, or we'll credit your account if you'd like. Let's talk about the stock market here today. Oh, Marcus Miller, by the way. That's our Jazz Artist of the Week. You like listening to some bass. You're going to love that. A little bit of slap bass. He's aggressive, but I like it. Anyways, let's talk about the markets here today. You got the Dow adding 1.6 on the day, 1.15 on the S&P, and almost 1% on the NASDAQ. A huge change of pace. We're going to cover all of that. Bit of a turnaround Thursday. I know you guys like your turnaround Tuesday, but we had a turnaround Thursday here today. We're going to talk about it. If we go over to the stock market, I'm hoping we can make our way there. I can do it. Don't you worry. Don't you worry. We're going to get there. There you go. S&P 500 remains in the chop zone, back and forth, just sitting around the 50% area. When I say 50%, I'm referencing the previous high, the virus high to the virus low. We're about halfway back. We keep chopping around, gaining a little, losing a little, gaining a little, losing a little. It's that tug of war. Will they or will the economy not this or that? You know, it's that whole discussion. And we're starting to move back into politics. You noticing some of those commercials on TV? I'm noticing it. Yay, Biden. Yay, Trump. You're bad guys. You know, they're doing the whole, politics thing. Doesn't matter what side you land on, get ready, because it's coming. We're about ready to get back into that, especially as the virus sort of fades away in the headlines. So we'll see what happens there. As far as the stock market today, here we go. You had the Dow as your strongest sector, right? Your strongest sector, or your strongest index. Still down 17% year to date, so it's got a lot of work to do there. Inside the Dow was healthcare. It was biotech today, really, that led the way in healthcare. United Healthcare, 4.5% to the upside there. One of the bigger weighted stocks there did well. Headed back to highs, it looks like there. Healthcare was the biggest contributor to the Dow's gains today, if you want to dig in there a little bit deeper. In the Russell 2000, unfortunately, that was the weaker area of the indices today. Down about 25% year to date. It's down the most out of all the major indices there. And biotech was what held them back today. Biotech has been a leader. Biotech pulled back. And just to show that, you look at the IBB. The IBB is just a pure biotech play. If you just like that space, I don't really like the space. So I don't look at it much. But it's been a leader to the upside the last 2 days. It's been a drag on the downside there. If we look inside the Russell 2000, you got a couple names that stand out. Cytomix Therapeutics. This is going to be in the biotech space there. Earnings were okay. I don't know why it fell. I didn't really look into it, but earnings weren't all that bad. In general, they did well on earnings, but down 36%, so it could have been something they said there. You're also going to notice Teladoc. Teladoc was down 4% on the day. They're issuing $800 million in convertible notes with a short a short maturity on them. 2026 or 2027 was the maturity on those. So they don't make any money. They need more money. They're issuing debt, basically, is what happens there. They're taking out a credit card. Think of it in personal finance terms. That's essentially what they're doing over there. So the Russell the weakest, the Dow the strongest on the day, and the rest falling in the middle somewhere. The name of the game today was the weak stocks, and the weak areas led the way. The stronger stuff that we've been seeing lately, it held back a little bit. Tech, communication services, and those super duper mega cap stocks, they were all a little bit weak. I mean, they didn't really chime in. It's that whole argument in reverse that we've been making. So pretty cool. As far as the S&P 500, we got a gap down today. We started the day lower, but we had 2.9 million jobless claims. That sounds like a lot. It really is a lot. It's unfortunately a very, very large amount. But here's what happened. We're coming down. We're coming off of that. It wasn't as low as we were hoping. I think we were hoping for 2.5 million, somewhere in there. Basically, if you look at this now 7-week average, we're at 36.5 million. It's about 11% of the U.S. population. It's not a great sign. It's also a record. We've never seen numbers like this before. And tomorrow, I'm going to point out, tomorrow we've got some econ numbers coming out, and the last month when they came out, almost all of them were the worst on record. So it's going to be a really interesting Friday in terms of economic news. Last month we had retail sales. Tomorrow we'll have retail sales. Last month's was worst ever for them. Manufacturing numbers, second worst ever. Industrial production, worst ever. Capacity utilization, it's an inflation indicator basically, worst ever on record. And a confidence indicator was the worst since 2011. It was pretty much the worst economic day in terms of news that we had, and tomorrow has a chance to recover just a little bit. We'll see, right? It's got a chance there. Hey, we pointed this out. I'm also putting this out on the old social webs there. Showed this to you yesterday. This is the sell in May and go away. Basically, it's the May performance of the stock market looking back to 1951. Basically a coin flip, and I've got it highlighted to the right there. Percent of the time that it's positive, 58.6. Here's an interesting stat for you. We are halfway through the month of May, pretty much, and guess what percentage of days have been positive so far? 60%. Right on the dot. Pretty much exactly how the month of May pans out. It's kind of an interesting stat there. We'll show that on social media as well. Follow us on Twitter and Instagram. Very active over there lately with a lot of great stats and, of course, updates and things and how things are going. Our FinTips video from yesterday was, should you take the 401k early withdrawal since there's no penalty? What should you do there? Outside the virus today, we covered sector performance since the virus high to show you the sectors that are performing the best and, unfortunately, the ones performing the worst. Tomorrow, I hope you're ready. We're going to go really geeky on this, looking at index performance, and we're going to see how often does each index actually beat the other ones. So we're going to go through history and show, and unfortunately it's going to be a lot of data. Hang on tight. So outside the virus tomorrow, it's the start of a study that we're doing here. We're going to expand on it. And of course, wine and wealth tonight, we're going to cover the stimulus details of the bill. The White House today, also probably some good news that helped the S&P and helped the markets overall. White House said today, we're interested. Phase 4, stimulus bill. We're interested in something. We just don't want to agree to what the Democrats have, and so they came out with that. The negotiations begin. Doesn't matter what side you land on. Negotiations begin. All right, looking at our individual sectors here today. Financials finally kicked in. Financials gave us a little bit of a reversal today, 2.5% to the upside. They've been the laggard. They're the second worst performing sector in the overall markets. And this is a great example of the laggards actually leading. We showed the sector performance in terms of from the virus high on outside the virus today, which I get it is like virus related, but you know what we're saying there. Anyways, for the financials, they have been dead last month to date. So if you look at the whole month of May, financials have been the worst performing area. Today, they jumped 2 spots. They're in the 9th spot right now. They've got a long way to go, of course, but financials actually helped out today. In the financial space, you got Wells Fargo. Pretty good reversal, up about 7%, and some seriously huge volume on the reversal day for Wells Fargo. I guess they're considering merging with Goldman Sachs. Goldman Sachs is just out there, man. They're just making it happen. So there you go. Regional banks going into like your Regions Financial, Synchrony, things like that. Up 3.18% today. This has been really weak. Still down 40% on the year. This has been the weakest area if you want to look at the industries, things like that. Just horrible what the regional banks are going through. Like I said, down 40% year to date, but a great little reversal for them today. Looking at real estate, we'll use the XLRE to look today. Basically finished flat on the day. It's still a weak spot overall this week. Let me see what we got here. Try something a little different. Can we try something different? Maybe we'll have to try it another day. So REITs actually recovering, pulling back. It's been pretty nasty the past couple days, so to see that try to put in a low, at least close off of its lows is a good sign. If you're in the REIT space, maybe the bleeding has stopped here, at least temporarily. Tech stocks up 1.2% today, but no match for the rest of the sectors out there. It was kind of middle of the road if you're comparing all 11 sectors there. But it's the only sector that has that's positive on the week, I believe. Still, only sector still positive on the week there. Obviously positive on the year to date, doing really well there. The next closest, by the way, is healthcare. They've been really strong as well. Today up 1% on the day, looking pretty good there overall. Healthcare stocks, I pointed out, of course, in the Dow, you've got United Healthcare. You had a lot of other names that were strong on the day as well. If you want to look through a few of those, well, tough luck. We'll have to do it another time. But that's healthcare. Let's take a look at oil. Oil, electronic session, almost up about 10%. It finished out the day up 8.3% in regular trading. Nice day, right? If you look at the chart, see over here this little consolidation. Very small, very short time period. It's not a lot to go on, but the fact that it's been consolidating sideways and a lot of people thought it would pull back. I even thought, hey, great, if it pulls back, that's fine. People expecting that didn't get it. Today we moved higher. Anybody that took a shot on that short-term pullback had to cover their loss today. Not too bad there. There was a report that came out from the IEA that said the demand for oil is actually a little stronger than what was expected, and so that helps support the price of oil. Also, remember, going into June, July, etc., we've got OPEC Plus cutting production, so people starting to price that in there as well. One thing that didn't participate today was XOP, down just a little bit on the day. You had a couple names in the space. Ranger Resources down again, another 5.75%, and Southwestern Energy down about 5.4% on the day. Those are some of the heavier weighted areas in the XOP. They just kind of dragged on the overall sector as it stands there. Other than that, you got a lot of things middle of the road. If you like looking at volatility down 5.5% today. Also trying to find an area where it sort of finds a little support or hangs in there for the moment. Nothing serious that we can go on just yet. Semiconductors a little bit higher today, 2.8% on the day. Taiwan Semiconductors, largest position inside the SMH. There you go. Up 2.3% on the day. They're building an advanced chip factory in Arizona. Good news for them, good news for the U.S., and so for that reason, you had semiconductors a little bit higher on the day as well. You also had home builders, which this is a broad ETF, so this includes Sherwin-Williams, Home Depot, things like that, the Mohawk Carpet, you get my drift. It also includes the home builders, but they had a good day as well, up 2% closing out the day. If we look at the sort of technical breakdown of the market, you had 4 new highs today. 4 new 52-week highs. Newmont Mining hitting new 52-week highs. I talked to one of their employees today, actually. That was pretty cool. Up 4.3% on the day. Largest holding inside the GDX, if you're looking, and the GDX very nearly hit new highs on the day. Netflix teased you, did hit 52-week highs, but didn't really amount to anything special. It underperformed the broad indices there, but still, obviously chugging along, looking really strong there in general. In General Mills, it did hit 52-week highs again, but it's a little extended. It started to pull back, just ran out of steam before the end of the day there. New lows, you had 16 of them today. 3 of those are going to be airlines, although the airlines closed well off their lows. Look at something like Southwest Airlines. You saw the dip to new lows today and then the reversal. It's kind of a turnaround type day all around. 3.25% gain on the day. You had the other airlines, Delta, which also closed off its lows. Lots of volume there, by the way. Heavy volume, basically flat on the day, but a lot of volume. People want to participate in these airlines. At least they're trying to pick a little bottom. I don't know if it's the bottom, but you could see today very clearly that they were trying to pick the bottom. American Airlines up about 0.5% as well. Some of the other new lows on the day, Under Armour, not a good day for them. It did close off the lows, little extra volume, slightly above average there, but it's sort of sniffing for a bottom, basically. And Xerox is the same, one of the weaker performers in the new lows list today, but same thing, sort of sniffing for a bottom. People kind of like that sub $15 price target there. So that's it for your new highs and new lows on the day. As far as interesting ones go, news, individual stock news. Let's take a look here. 2.7% gain for Jack in the Box. Well, actually, they're going to stop their, they got a couple upgrades today, but they're going to stop. The main news was stop their share buybacks. They're cutting their dividend as well, so unfortunate for them. MasterCard in the news today added 3% on the day. It says it's starting to see a transition from stabilization to normalization in some markets. You could read that in detail if you want to look that up a little bit. They're seeing a small uptick in consumer spending. It's positive. It's a good sign overall. If you're out there using your credit card again, it means things maybe aren't as bad. I don't know. We'll see. Tyson up about 2% on the day. I believe this was the Wall Street Journal. I want to give them credit. I'm going to say it was the Wall Street Journal then, because I'm pretty sure that's who it was. They reported that Tyson is cutting the wholesale prices of their beef by 30%. There you go. Take it for what it is. That's Tyson up 2% on the day. Earnings tomorrow. It's Friday. Usually you don't have a lot of earnings. You got VF Corp is really the only one to take a look at. It was up 5% on the day, expecting 19 cents a share tomorrow on about $2.3 billion in revenue. You've got dividends paid out from Amgen, $1.60. Rockwell, up on the day as well, paying out $1.02. Oops, there you go. Southern Co. paying out 64 cents, and that's pretty much it there. Dexcom's officially in the S&P 500. Domino's Pizza officially in the S&P 500. That one's all done and taken care of there. And yeah, I mean, you know what? That's pretty much what I got for you. The worst performing sector today, consumer staples, and there you have it. In the real estate space, by the way, your cell tower companies, I don't know what I can't think of what they call themselves at the moment. American Tower is a name. It's a cell tower type REIT. That's the biggest holding in the XLRE. It was down a little bit today, about 0.5%. Let's call it that. Crown Castle in the mix. It was also weak. They all closed off their lows, but a little bit weak on the day. Vornado was the leader. We talked about this one yesterday. Vornado, very strong in terms of volume today, and obviously strong in general, added 8% on the day. And as I look through, we usually look at things like public storage, slight gain on the day. Digital realty was lower. Yep, about 0.5%. So there you go. That's what you have. I will take a chance here and try to answer some of your questions. I want to try to do things a little bit differently here. We're going to try to revamp this whole thing. I'm not just making that up. It's coming. It's coming. All right, we'll see what we can do here. Cool. If you pretty much golden if you max out the Roth IRA, Roth 401k. Yeah, if you're younger, lower income and stuff, and you got a long time until retirement, of course. Yeah, we don't know. I mean, you got to imagine there's a lot of money being thrown around right now to the tune of trillions, darn near tens of trillions, and you got to imagine they're going to get that money back somehow. Taxes are going to have to go up at some point. I'm not excited by that. That's why I keep saying, quit giving us money. Just stop it. So we don't need it. Being an election year, does it influence how quickly the markets recover? Yeah, we covered that a couple days, maybe last week. We covered performance in the election years. We've also done a class for customers, I believe, on that. We're going to start changing our focus now in our classes for customers towards the election, performance, things like that. You've got the virus sort of fading away. I don't want to say it's over, but like fading away a little bit, and the election creeping back up, so the narrative changes a little bit. Just watch. That's how the headlines are going to change coming up here. Yep. You think it's just a day of wonder? Stock market's priced in all the good news. Yeah, you're a bear. I like it. You like the downside there. I like your contrarian mindset. It's a little tough to be true contrarian, because in the last couple weeks the market hasn't trended one way or the other. So if you believe the markets are pulling back, you have every reason to believe that. If you think they're going higher, you can make a very sound argument for them to move higher as well. Just back and forth here, really, since about April 20, well, you can go back even further, about the middle of April. So for the last month, we really haven't achieved a whole lot. It's kind of a tough one there. Yep. Stupid question. Okay, let's see what you got. Where can you find the total volume index for a company? You can't find it. The total, you mean the volume for the day? Any chart usually has it in the background or has it at the bottom. Free charts out there like stock charts or finviz.com. Anytime you type in a symbol, it should give you the volume. You should be able to actually set different parameters too to be able to see if it's above or below average, if that's what you were asking. Hopefully I got that. MGM, a bit of a reversal today as well. It's definitely an underperformer. I'll keep the same comments on stocks like these. You don't need to pick the bottom. And if you do try to pick the bottom, how about 1/4 of your position? So if you're planning on entering with X number of shares, how about 1/4 of that to try to pick the bottom on down days or whatever it may be? Don't like the idea of trying to pick on something that's weak in the short term and in the midterm and try to guess the bottom. That's a tough living right there. Yep. Delta, I saw that. Yeah, there's a little bit of airline news out there. And also United Airlines, never thought I'd see this. They've got way too many pilots. Even as they come out of the virus, they're like, hey, 2,000 to 3,000 extra pilots here. We don't know. Maybe starting to sound the warning for what they're about to do there in terms of adjusting the payrolls, to say it in a sad way. Yep. Yeah, you showed an average chart yesterday regarding May through the September drop. Then why sell in May and go away? I did show that chart. Yep. I'm not sure I understand the question, but you're right. Yesterday. Oh, don't get me started on Uber. There's a couple stocks I don't need to get started on. Would you say the majority of tech stocks are overvalued, still have room to run? Depends on where you're looking at. Some of the software as service stocks out there are a little bit overvalued in the short term, just relative to their short history. But you can make an argument that the market's still cheap at this point. You definitely can. I mean, that's not an argument. Tech stocks, you can make an argument in general that they're still relatively cheap, even despite the run. Yeah, and you see that coming out here and there, different people. Fed funds pricing in negative rates, yeah, they are. They're never wrong 1 week ahead of the announcement. It's never, ever been wrong. They've been wrong any time longer than that. So, of course, that's just people placing their bets that they think that's a possibility. It's a real possibility, and I think the Fed left the door open the other day, yesterday actually. Jerome Powell said that they're not interested in lower negative rates at the moment, but he said for now. And he didn't say it as in like, we're not interested in negative rates for now and like hint it. He just kind of threw it in there. He doesn't do that. So that was interpreted as it's on the table. We'll see how bad things get. Yeah. Would it be better to invest in low-cost ETFs, such as the ones you mentioned there, with a small purchase charge, or an S&P mutual fund? You can either cost average. I would go with ETFs if you only had those two choices. You definitely want to ask yourself, though, why are you choosing those two? Is there something in particular performance-wise, volatility-wise? What are you looking for, right? Ask those questions. Don't just randomly pick them because they're the first name that comes to mind. We're going to try to highlight a little bit of this tomorrow on Outside the Virus by showing where you could be looking, depending on the performance you're looking for. Yeah. How you planning on changing the ask questions part of the show? Oh, yeah, I need it to be like more right in my face. Right now, it's just this little window. I'd like it to be more in my face, and if we're really smooth, I'd like it to just pop up on the screen, right? If we could just get someone to help with that and then have like questions pop up that I could answer. I don't know how that would work, but yeah, we're working on some stuff, you know? Just working on stuff. Why sell in May, then purchase again in September when the chart chopped through the summer? Wouldn't it be a wash? It's not really. That's the trouble with the sell in May and go away time period. It's not really a suggestion to sell. It's more of a warning sign that things tend to get quiet. So I look at it as if through the May to September time period you don't notice much change in your 401k, or if you're trading and you just don't make any headway, you're not supposed to, right? You're fighting a sloppy market. There's really no good argument that says you should just close positions in May and come back just before September. That's a tough one to make. We did that last year, but it's more of just an indication to say, hey, things probably get a little sloppy for a while. Quiet, normal summers, people go on vacations and things. Could this year be different? Sure, they say that every year, you know. Where should you put 10,000 in the short term? I can't tell you that. I'm not allowed to answer that type of question. I would ask yourself what you're looking for, what's the type of return you're looking for in the short term, and what type of risk or volatility you're willing to accept. And if short term means you need that money for something major, house purchase, having a kid, something like that, I think the answer might just be a high interest savings account, which even then, what's the difference? Just put it in your savings account. Yep. Oh yeah. Capital One on the MasterCard news. Yep, Capital One with the slight uptick in spending as well. Yep. I would bet. I mean, let me just see if there's. I don't want to give you any grief there. Yeah, pretty much the same thing. Good news for the credit card companies. There's an idea. Get Cody to collect the questions, put them on a separate screen for you. Then he could pick favorites, and you guys would all have to like butter him up to, hey, pick my question. We'd pick some names, like don't answer those questions from whoever, man. They ask tough questions. Oh man, it's in your wallet. You read that if one just invested from November to April timeframe, the last 50 years, they'd have outperformed the. Yeah, we did that last year. It's in. Maybe we'll touch on it again, but we did it last year as a study for our clients as well, just to kind of show, hey, what would happen if you did? The trouble is you're going to kick yourself if you miss out on the 1 year that it keeps grinding higher. Not that it would matter in the long run. I guess you'd still be happy, but that's the hard emotion to get through. Yep. You don't like this market back and forth. Bugs you. Yeah. I could deal with it if it was more volatile. These little up days and down days, it's typical seasonal type trading, but yeah, it's not. It's not all that exciting. Thoughts on some of those utilities for long-term value? Same thing. What's the reason you have to start a position here? If you're thinking, all right, I'm looking for somewhere, what do I do? I'm a little biased because we have Duke Energy here, and who likes their energy company, right? So maybe a little bias there, but ask yourself, if you're looking to start a position, what's the reason you'll start a position? Is it a price, a certain value you're looking for? Where will you start that position, and how do you define that? Versus just saying, today's good, I'll just dive in. Yep. About hold in May and go away. Yeah, typically people just hold in May and go on vacation. This time you better bring your mask, I guess. Software put comments on the right page. Yeah, we have it. We do. We do numbers. We do numbers and stats. So anytime things get technical, you see the troubles I have sometimes with this stuff. I love it. I love it. I love it. New lows on the cruise lines, you think? They're very close. I mean, there's no reason they couldn't just have a couple bad days. With the current volatility they're seeing, you're not asking for much in terms of those to make new lows. I wouldn't be able to say it, but I would think that would be a buy if they made new lows. Something like Carnival Cruise, largest cruise line out there, all of their comments about having enough cash till November to just sit idle, you would think that'd be maybe the focus, but I can't tell you. You invest in utilities so that when you get the bill, the dividend pays you back. That's clever. I like it. If only they paid monthly on some of those. All right, I will wrap it up there. I do appreciate you stopping by. I've covered everything I need to cover. Have a great rest of your day. I'm going to get ready for our class tonight in the Speakeasy. Come grab a drink, hang out with me, and we'll see you then. Thanks for watching. Enjoy your day.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.